Welcome back, everyone, to another deep dive. Today, we're jumping into the global stock markets, specifically some top U.S. stocks flagged by a pretty advanced AI system.
That's right. We've got this analysis from PennySmart World Stock Market. Their AI, it seems, digs through tons of data to find companies doing really well.
So our mission today, like always, is to pull out the key insights, the really important stuff from the raw data you've brought.
Exactly. We'll look at their criteria, the actual companies popping up today. That's July 31st, 2025, and, well, why they're moving so much.
Yeah, think of it as your shortcut to knowing what's actually driving the market right now. We'll hit some surprising facts and maybe even touch on some interesting investment strategies from the source itself. One, the AI's core criteria and today's movers. Okay, so let's unpack this PennySmart AI thing. How does it find these stocks?
Well, the description says it looks for fundamentally excellent companies. That's key. But also companies with exploding trading volume and the most significant rises.
So good companies already, but also ones getting a lot of sudden attention.
Precisely. It's that mixed strong fundamentals plus momentum. It's not just that a stock is up, but is there a solid reason? Is the company actually healthy?
Right.
And today we've got this list of 13 U.S. companies that tick those boxes. Some really remarkable price changes for July 31st.
And the data's pretty deep, isn't it? More than just price. We've got market cap, PE ratios, EPS growth, analyst ratings, the whole picture.
Yeah, it's quite comprehensive, gives you a lot to work with. 2, high volume movers, news driving the surge.
Okay, let's get specific. First one that jumped out, Harley-Davidson, HOG. Up, what, 13.38%?
That's a solid gain. But the volume, that's the kicker, 13.77 million shares.
And the relative volume, 7.77, so nearly 8 times its usual traffic.
Exactly. Huge interest. And the why seems to be this deal for its finance unit, KKR and PMCO involved.
Right. And that news apparently overshadowed their Q2 results, which were called downbeat.
Which is really interesting, isn't it? It shows how the market can, look past a single bad quarter if there's a big strategic move happening.
So, like, future potential trumping current numbers.
Potentially, yeah. This deal with KKR and PMCO, it probably signals a big shift, maybe fresh capital. Investors might be betting on that next chapter, even with that pretty rough neck and neck of 40% EPS growth figure in the background.
Okay, so Harley shows strategic pivots. What about global industrial company, GIC? That one had the biggest jump today, right?
Oh, yeah. Plus 26.82%. Just massive.
And the story there seems simpler. Their Q2 earnings call highlighted record profitability.
Exactly. Operating income up 27%, margins at an all-time high. It's almost a textbook case.
It makes you wonder, how often do you see such a clear line between great operations and the stock just, well, soaring like that?
It's a good question for you listeners. I mean, the margins themselves, 35% gross, about 6.7% operating, are good. But the news saying record-breaking, that's what likely fueled the fire. Real tangible success.
Then quickly, Generac Holdings, GNRC.
Yeah.
Up almost 20%.
Yeah, plus 19.61%. Impressive EPS growth, too, over 58%. And the driver there, Q2 earnings beat expectations. Strong demand, both residential and commercial. Pretty straightforward story. 3, tech and finance standouts. Growth and innovation. Okay, moving over to finance. Lending Club, LC, that shot up over 21%.
Wow, plus 21.21%. And their EPS growth.
Also strong, plus 67.51% DTMUI. The news points directly to a Q2 beat and significantly strong guidance for Q3.
So just solid performance and a positive outlook, fueling confidence. Makes sense.
Pretty clear link there. Sometimes it really is that simple.
Now, tech services, InterDigital, IDCC, up, what, nearly 11%?
Plus 10.77%. But look at the TTMUI EPS growth, plus 85.28%. That's the highest on our list today.
85%. And the margins look incredible, too. Gross margin almost 88%, operating over 57%. What's driving that?
Well, the news mentions 2 things. Hitting an all-time high, which is momentum, but also a key Samsung patent agreement.
The patents.
Exactly. It really highlights how in tech services, intellectual property, and big strategic deals like that, Samsung One can underpin these amazing margins and growth. It's the value of, well, pure innovation.
Okay, what about Fubo TV? FUBO, up over 17%. But this one's kind of different, right? The operating margin is negative.
Yeah, negative 9.43%. That definitely stands out.
But the news sounds great. Record preliminary Q2 results, A profitability milestone, an upbeat forecast. How does that square? Negative margin, but positive spin.
Well, that's a really crucial dynamic you see in these high growth sectors like streaming. Investors, they often look past current losses if the growth story is strong and if the company hits key milestones.
Like this profitability milestone.
Precisely. The market's reacting to the direction, the trajectory. They're betting that those record results and upbeat forecasts mean profitability is coming, even if it isn't here quite yet. It's a bet on the future potential. 4. Beyond the headlines. Deeper financial insights and diverse sectors.
Okay, shifting gears a bit. CECO Environmental Core, CECO, manufacturer, up almost 8%.
Plus 7.88%. Not the biggest jump today, but look at that EPS growth again. TTM-YOY plus 288.78%.
Wow. Nearly 300% growth. What's the story?
Q2B raised revenue outlook, and this, the biggest ever order. And analysts noticed target price apparently jumped from $33 to $55.
So one huge order can just completely change the game.
It really can, especially for a company like this. It just dramatically re-rates the whole outlook. You can't imagine that order cause some celebration. Strategic win like that is massive.
Okay, interesting. Now, First Cash Holdings, FCFS, smaller jump, plus 5.65%.
Yeah, but the news context is neat. It mentions gold prices are a strong tailwind.
Ah, so an external factor.
Exactly. It reminds you how macro stuff like commodity prices can directly boost certain companies. You might not immediately connect gold prices to a pawn and retail business like First Cash, but their business deals heavily in assets where gold value matters.
Right, makes sense. A subtle but powerful link. Okay, last one here. Bungie Limited, BGUA, up over 5%.
Plus 5.19%. Mixed news snippet here. Q2 EPS beat, but revenue missed. Some mention of processing margin recovery.
But the big thing.
Yeah, the really big news. They completed that massive merger with Viterra, an $18 billion deal creating, wait for it, a $100 billion company.
Wow, that's consolidation on a huge scale.
Absolutely. It's a prime example of how mergers can totally transform an industry. Even if short-term revenue, like in Q2, is a bit shaky, the long-term implications of creating a giant like this market share, efficiency, that's likely what the market is looking at. 5. Investing wisdom. Strategies from the AI's creator.
So we've seen these individual stories. But the source, PennySmart, also offered some general investing thoughts, right, from the AI's creators.
Yeah, they did. Some interesting bits on timing, both buying and selling. Not just finding good stocks, but when to act.
Okay, so what's the advice on buying?
Well, one idea is waiting for a 50% adjustment after a stock has already shot up sharply.
A 50% pullback? That sounds like a lot.
Yeah, maybe not literally 50% of the price, but perhaps 50% of the recent gain. The idea is don't chase the peak. Wait for it to settle back, absorb the gains. A more disciplined entry, you know?
Right, buy the dip, but strategically.
Kind of. Or for what they call stronger assets, they suggest watching for a stock that's holding steady at a high price, but with volume decreasing.
Less trading, but the price stays high. What does that suggest?
The thinking there is often that the initial excitement is over, but the serious holders aren't selling. Maybe accumulation is happening quietly. Underlying confidence, not just hype.
Interesting. Okay, what about selling?
They suggest maybe taking 50% profit realization when a stock nears what looks like a resistance level, a price it struggles to break through, lock in some gains.
Okay, take half off the table. Then what?
Keep an eye on the news, obviously, but also consider selling the rest if the stock departs from its set moving averages, basically using a technical signal that the upward trend might be breaking.
So a mix of fundamental awareness, news, and technical signals.
Seems like it. They also add that sometimes a long-term investment approach is good if you've really dug into the company's financial health.
Makes sense.
And there's this intriguing point. An unexplained rise without news might hint at hidden positive news coming. Market whispers, maybe.
Huh. Reading the tea leaves a bit.
A little. And finally, just basic common sense. Avoid companies that were recently suspended or are clearly failing. Foundational stuff, really.
Yeah, definitely rule number 1. So overall, it's about being informed, timing things carefully, managing risk.
And thinking critically, not just following signals blindly. Outro.
So we've really covered some ground today, from how this PennySmart AI spots potential winners to the stories behind specific stock surges like Harley or GIC, and even these practical investment tips.
Yeah, you really see how combining the raw data like price and volume with the news context gives you a much, much richer picture of what's actually happening in the market.
Absolutely. It's not just what moved, but why it moved. Understanding those underlying dynamics.
Exactly. Moving beyond just the headlines to get the full narrative. Gives you a much better perspective.
So as we wrap up this deep dive, here's maybe a final thought for you to consider. We see how advanced AI can spot trends, identify strong companies, even suggest strategies. But where does your own research fit in? Your own critical thinking, your personal financial situation? How do you translate these kinds of insights into action that makes sense for you?
And it's worth repeating that crucial reminder from the source material itself. This material is for reference only, and the responsibility for investment lies with the investor. Ultimately, it's your call.
Absolutely. Okay, until next time, keep exploring, keep questioning, and keep learning.